Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, July 23rd, 2024. It's 12:39 p.m. Eastern Time, so I'm starting the video and wanted to give you a quick update on everything. So we've hit that bounce target I gave you yesterday for the what I call the last hurrah. I mentioned that before a couple days ago that we'd probably get one last hurrah off this trend line here, and that's what I was looking for. And that was here, let me pull it up. That was the last hurrah. I'll give you, this was, yep, when we hit the trend line, showed you going up there to, that's 55, 27, 30. And then again yesterday, showed you a little trend line here. So if we can pop that, that would put us up there and then reverse, and that's what we've done. So let's get to that chart. And that was obviously your objective place to go long. Now, look, we can, or to recover the short, sell the long and reverse the short. Let me pull the ES chart up. I had it up a second ago, right before I queued up this video, and I lost it. Too many charts going right now. Somewhere in here, come on, ES. There it is, right there. All right, so let's tighten it up. Here it is, 56.30. You had it 56.27 and change, but every time I come in here and tweak, I might have done it during a video. If I grab things, the trend lines move. You can, it's the same level. You can see right there, crosshairs, the high 56.29.75. So again, as I like to say, close enough for government work, and it's pretty good resistance. And so that's it. We hit it. We hit it. We put in a divergent high. We could certainly go higher. Right now, they're buying the market up, like I figured they would off. You know, this is good support, biggest drop in months. You're not just going to crater down. Like I said, the Biden thing was priced in for most, the markets, and that's that. So, a couple things. Let me speak to the bulls out there that are looking for more upside. Those currently bullish on the equity markets. You've got this uptrend line right here. That would be a logical stop on a 60-minute close below that. And then, of course, you can see all my other supports. The big levels, obviously, that trend line, I zoomed in tight. That's the trend line off the April lows, which we just bounced off of. So, obviously, a stop there. And, again, I'm speaking to those, that, like me, that are looking to, to game the bounce. And want to turn around and get short. That was your objective shorting level, as would be a break of the uptrend line as well. That gives us, by the way, that's a little wedge pattern there on this bounce right there. There's your divergence. There's your uptrend line. Yeah, if we want to go up a little bit more, sure, there's plenty of room if this wedge wants to ripen up a little bit more, but it could pop here any moment. And let's look at NQ, QQQ. NQ, here's my 60-minute chart. See the thing, at the same time, you had the breakdown. Remember that NQ took out the trend line, but ES at the same time hadn't, because ES was holding up better before. And so this is a great example of why you want to chart both, whether you're just trading one or the other, because and this is a case where NQ traders that are just blind, you have blinders on and only trading QQQ or NQ charts, would have shorted or added to their shorts on a break of that trend line, or stopped out of their longs. And then they weren't paying attention that the ES traders and the SPY traders stepped in and bought when it fell to the comparable trend line. However, you can see now we are back testing the trend line. If we go higher, and it's certainly I could see the possibility. I don't have super strong convictions. It's just my preferred thing. Right now that may cap the rally. And if you look at it this way too from NQ, here, let me give you QQQ. I know the majority of you guys trade the ETFs, so I like to cover both, but here we go. QQQ, it's just a beautiful trend line, well defined, and textbook breakdown and back test. And we've been back testing for a couple days, and so we could get a rejection here. If we pop the trend line, then it's going to be, I don't know if I'll call it a bullish event, because SPY still held above trend line resistance. If both of them broke down and they reversed, that might be. But I just wanted to give you, if we do drift a little higher, the next objective Uh, Place to book profits on longs for those of you still long looking for more upside, or those of you looking to get short or add to shorts will be that level right there. That's that key level, about 487.30 or so. You've got all these reaction highs here, here, then the breakout, then you gap down below it. And so, if QQQ wants to backtest for a little more or push up a little higher, that's price resistance, and it also comes in with the downtrend line resistance. I also threw up some, no, I didn't yet. Let me throw up some fibs for you. Fibonacci retracements, just take a look and see how much we've retraced so far. So if you zoom in tight, you can see from the highs to this recent low right here, we hit that 38.2, which is a typical run-of-the-mill retracement. This is a 50% lines up. As I've talked about, it never fails to amaze me. I hadn't done this before, not on QQQ. I think I put them up on SPY. Right there at the gap, if the Qs want to test the bottom of this big gap from last week, then that's going to line up perfectly with the 50% Fibonacci retracement level. As I said, we already hit the 32. If you can't see it in the video, that's the line right there, 32%, 38.2, 50, and then the 61.8 is right there. I'm going to guess that if I put up the 78.6 fib, then it's probably going to be right around the top of the gap. Yep, there it is. So there's the top of the gap right here. Along with the 78.6 fib. So that's kind of a potential bounce range uppermost. I don't think we'll get that high based on everything I've seen in the charts, but if we do, then I'll be talking about that as a level. I would put short up to that 50% and maybe hold off. I wouldn't keep adding in unless you see a reversal off that 76.8 and a backfill the gap. Right now I'm just kind of feeling that way, where I think this is right where we are, right where we hit today again on that bounce target on the ES and the back test on QQQ. I think that's, to me, a very objective level to short. And again, you could add up to the bottom of the gap right there. So let me just show you from where today's high, which we're just off of, it's only less than 1% higher. So that's that scale back in zone. And there it is for you. Let me give you SPY. I think I put up fibs on SPY earlier. Yeah, I did. You can see right here, from the move off the highs to the lows, a perfect, and again, never fails to amaze me. This was my bounce target that I gave you, before day of hitting the trend line. What was that, Friday, right? And that was it. And I hadn't calculated the fibs, but it lines up perfectly. That was the reversal off the trend line where we covered shorts, went long for an active trade, or at least I did, and then boom, hit that 50% fib retracement. If we go up higher, the 61.8 comes in with this reaction high, and there's a couple reactions. That's also price resistance. And here's how it looks on the SPY 60-minute chart, and there's that perfect reversal. Excellent opportunity to cover shorts, go long for a bounce, resistance, and that's that. I'm going to get to, let me get to the, just want to cover the usual stuff I've been highlighting recently. I threw out that UPS trade idea today. I've always said I don't take every trade idea on the site. I'm not taking this one only because my current outlook for the market. But my job, again, is to provide a technical analysis and trade ideas. Your job is to decide what to take, whether, which ones to pass on, which ones to take, if they align, with your trading style, your outlook for the market or a particular security. All I can tell you is that's really good support. The stock has positive divergences. If this market is going to go to new highs and beyond, not just to the top, remember, I can allow my maximum upside is about another from where we just peaked, where the market topped. We came within 1.5% of the top of my QQQ market top range, a little below that on SPY. Those are my max levels. So anything much beyond that, this market could have some legs this year in it. And if it does, then, again, I'm throwing out, as I told you I would do, try to highlight and share the best looking long trade ideas. So at the very least, this one has already been beat down, especially compared to FedEx. This was an earnings beat today. There's FedEx, so you can pairs trade, on this if you wanted. FedEx has a big divergent high. That's negative divergence. See my divergence lines here and here, just like you had a divergent high there, and then boom, it went down. So if you want to do a pairs trade, you short FedEx, you go long UPS. And I think UPS will outperform FedEx. What does that mean? They could both drop. If my market call's right and we're going a lot lower this year and next, this one will just drop less, most likely. But either way, it's like I said, I don't want to beat a dead horse here. I can tell you definitively it's objective if you're looking for long trade ideas. It's at good support. You can see all the reactions here. Massive gap right there. That's, on a 1 to 5, that's at least a 3 or 4 as far as good support goes. And then, I give you 1, 2 bounce targets. The first target there is at 133.95, just below 134, and then the downtrend line, if it pops that second target, with a couple potential targets up there and a downtrend line. So this is kind of if the market is going to hold up and not crap the bed in the coming months, that's certainly a potential target. So, and it's all about risk reward. This one just reported, so you got the gap out of it. You know what I mean? It had got clocked on earnings today, big gap down, and so at least for the next 3 months, you don't have to worry about waking up to a 13-15% gap down on an earnings miss or disappointing guidance or whatever they did. I could care less and listen to the report. And I knew going in they've had some issues, things slowing down. And it's also telling the economy, by the way. Remember, I do have this in, and this is one of I have a watch list called Leading Indicators. Here, I'm going to float it. And I have different watch lists. This is one of them, and it has certain sectors, shipping, and ports. I've got that's airlines in there. Transportations, IYT is a transportation sector. ADP and paychecks, which I've covered, they long since peaked and they're still below their peaks. Railroads, all these things. That kind of, just a thing that I put together recently to show you, some of the things are leading indicators that should be up. Visa and MasterCard are two big ones. Why? Because obviously, I don't have to tell you, they have a very simple business model. They get paid every time you swipe and buy things, and you can see, and also, they collect interest, on the unpaid balances, but then you can start to see defaults in a recession. Anyways, there's MasterCard. These guys are, they rolled over, and they're coming off divergent highs. So I've covered these before. I don't want to really digress. I just wanted to mention that UPS, the takeaway here again is that UPS is in my this leading indicator list. I also have that things to watch list, which has similar things, those stocks in it, other things too, like MBI, municipal bond insurer, what's going on there. This is something's rotten in the state of Denmark there. The semis are in there, leading indicators, bearish engulfing, candle divergent high. All right, I'm going to get off on a tangent if I go through all my things to watch stocks, but there it is, guys. So that's my view on the market. Very much like IWM. I actually got back into that. I obviously expected a market bounce, and so covered my RTY short and the small cap short the other day, and reshorted today along with the NQs, the NASDAQ 100. All right, and let's cover the grains real quick. Liking those still. ZS soybeans, or you can use SOYB, the soybeans ETF, coming off that divergent low, downtrend line, bullish falling wedge, breakout back test. It took out, as I say, that would run over 149.5. Took that out. If you missed it, you had a perfect opportunity, a perfect back test right there, and it's moving. So anyway, they look constructive. Same thing with corn and wheat, obviously. So, and again, if nothing else, a way to diversify and spread your bets right now into something non-correlated. What else do I have for you? Okay, so Natty, or Nat Gas futures as we call it, just rolled. So I went to pull up I was charting, giving you the August contract. Now the platform stopped that. I can't pulled up as the continuous, that little infinity sign. And so I have to mark up, which I'll do right now for you. It's the same, same thing, but the price levels are different. Remember, when you roll futures, especially things with volatile prices like natural gas and things, natural gas, you get the, contango and backwardization, all that kind of stuff going at times. And so the prices can really vary from contract to contract, but the bottom line is coming off that divergent low. And as I've covered many times, the long-term charts, this is just a 6-month, 2-hour candlestick chart. But that's the level that was an important support level right here. Support, 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 support. Broken, whipsaw, back above it. And now, as you can see on the newly trading September contract, I just added a downtrend line, which needs to pop. I'm going to tighten it up a bit. Why did I do that? I wanted to come in here. Let me come on the top of these candles. I think that's a good fit. So we're right on it right now. So there's your level, guys. Pretty much keep it simple. We pop today's highs, and even if you don't trade futures, UNG is the same story. So if you trade UNG instead, which is the ETN for natural gas, you basically want to see a pop of today's highs, and then that should get us up to those targets I gave you a little while back on nat gas futures. Maximum at this point in time will be this trend line. But remember, UNG over time, since it's an ETN, it is using futures, but it's rolling them. It has fees, expenses. You're better, even if you can't trade futures. They have free futures charts if you're through your broker, probably if you use Thinkorswim platform, formerly TD Ameritrade, now Schwab. They give you free futures quotes and streaming charts. So does investing.com. So if you can keep an eye and correlate, look at the levels that I've given you or your own levels for natural gas futures, use that to time your entries and exits. Entry meaning breakout points. In other words, let's just say, for example, this was a setup that we had to break this trend line to trigger a buy signal. Well, UNG may break it, and then you think you go into it, but at the same very time, the comparable downtrend line on the futures, maybe the futures contract ran into and got rejected. So then you took a breakout that just wasn't accurate. So again, this does a good job of tracking natural gas future prices, not a perfect job. That's why you want to use both charts if you can. Gold and silver, I told you the other day I like it support. I'm not super crazy about them. I love me some divergences, and we don't really have it, at least not on this 2-hour candlestick chart, nor do I believe we have it on the 60-minute, but I might have given it to you on SLV or whatever. We've got some divergences forming, but I like to see clean separation in the PPO and RSI like that. So either way, look, it still adds support, and that's that. And then you have gold. Like I said, gold futures a little sloppy, took out the trend line there. So like I said, I'm doing the update because I know people like gold and like trading those, but that's what I had on. And it's kind of a meh trend line. I only had 3 reactions there. So again, the important thing, mostly silver, I like being at support, both on SLV here. And we've just traded this with near impunity. Short here, long cover here, long, close and reverse there, close long at the second final target, short it down, long again, but keep your, don't let it get away from you. Keep your stops relatively tight. It's just moving sideways since I highlighted it the other day. But yeah, I think it warrants maybe a small position or wait for a better setup. There's nothing wrong with that. What else do I have for you? Let's just wrap it here. I could go over all the market leading things. They're all bottom line. I covered them all, daily, once, twice, 3 times a day up until, into Thursday, Friday, and yesterday, because they all hit support. And so they all bounced off that support. So there's no news there. They're really, I was looking for a reflexive bounce, and most of them did that. Microsoft, boom, off support. So, I could start drawing, and I can do that, and I can tell you there's some resistance levels here. There's certainly right there on the daily. I just added it for Microsoft. There's a gap. NVIDIA also a gap. You can see right here. Traders love these gaps, and so NVIDIA just made a backfill of that gap, so that makes that an objective short. And look, if they start popping through one resistance level after another, then yeah, we might challenge the previous highs. Like I said, unless that happens, we've got bearish engulfings on the most important stock, NVIDIA. We have it on QQQ, which is the market, or the index we're trading. We have it on the semis. and they're all still intact. So unless proven otherwise, I'm going to treat that as a potential market top. That's why I gave you those market top ranges. Alphabet bounced off support in the 50s. Everything, I already covered, and that's it. That's looking for that one last hurrah. Maybe there's more, maybe not, but it's not worth it to me. I just want to kind of convey my thoughts now. The risk reward to try to eke out, unless I'm just dead wrong and this market's going to go up another 10, 15, 20%. But to eke out and try to, get another, whatever it is, 1, 2% to the next resistance level. Right now, I don't think it's worth it. So, and it's not a hard short either. It's a bounce back to resistance. When we take out, here's QQQ. I just jogged over to a daily chart. I have different versions of this, but this is a daily chart here. Here's the uptrend line. So let me draw that out for you. There's an uptrend line off the April lows. Again, a different variation, different board. Comes in clean. It catches all these reactions here, here, here. One little intraday or one daily break, but then right back above it. So bottom line is if and when, just moved it by mistake. If and when we take out last Friday's lows, that should open the door to the next downside targets that I have out here on the longer term chart. This uptrend line and or that 449.70 level, all these other ones here. So that's what we need to do, because if we take out Friday's lows, well, QQQ will clearly be below the trend line. It already took it out on the 60-minute chart and on the daily that day. And then SPY, more importantly, SPY hit the trend line and bounced off it, the one I've been covering. And so to go down now, here's Friday's low. So for SPY to get there, the only way it can get there and take out that low is by taking out the trend line. So that's it. And then, all right. So that's where we're at. I'll continue to hunt for additional trade ideas, and I told you guys I was out yesterday, ended up buying a car, trading another car in. I was at the dealer till late, and then went out to dinner with my wife after. So I didn't get anything out to the end of the day, and I haven't looked at comments. So I'll try to catch up today, go back for the last day or two, and reply to any chart requests, either under the thread that you, if you ask for any updates on anything, I'll go and make the reply there, or I'll cover it under this video, and or cover it in the homepage post if it's something that I miss. I haven't looked at Bitcoin in a couple days. I'll check Bitcoin, all that other stuff that I usually follow, and anything else you guys want to see, just throw a comment under this post, and I'll try to get some charts out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.